The last mistake we see people making is probably the biggest mistake. That is too little, too late. Apparently, Albert Einstein once said that compound interest is the eighth wonder of the world. He who makes it, he who understands it makes it, he who doesn't pays it. And this is probably the two most powerful charts that I'll leave you with in terms of the mistakes. The first is we have two investors, age 25, starting investment at age 25 and age 35. They do everything the same. They invest $5,000 a year, a very small amount of money. The portfolio returns 5% per annum. They both invest to age 65. Investor A finishes with about $640,000. Investor B finishes with $350,000, almost half of that of Investor A. And the difference is 10 years. A 10-year difference made a huge difference right at the end of this period. On the right here, who reinvests their dividends in their share portfolio? Just out of curiosity. Okay, you're doing the right thing. 1985, here's an example of two investors investing $5,000, a one-off investment of $5,000, that is it, in 1985. One reinvests their dividends and one takes the dividends and spends the money. The investor that spent the money and took the dividends as cash ended up with $32,000 as of the end of 2015. The investor that reinvested dividends, $116,000. They've almost quadrupled the end value of their investment compared to the investor who took the dividends in cash. And this is the power of compound investing. Not only that, the time you invest for, the longer that time frame, the bigger the investment at the end of the day. They say that most of us overestimate what we can achieve in 1 year and totally underestimate what we can achieve over a lifetime. Small amounts of money invested over long periods of time can make an enormous difference, yet we choose to ignore this fact. So here's my challenge to you. Apply a wealth tax on yourself. Take 5% of your income, and every time you get paid, direct that money into a long-term investment portfolio. Boom times, recession, summer or winter, it doesn't matter. Religiously invest that sum of money at the same time. You'll be blown away by what your portfolio could be worth in 20, 30, 40 years from today. If you think you may not have the money to save, think about it this way. If interest rates rose tomorrow and the repayments on your loan increase tomorrow, you've probably got the money to make those repayments. No different if the government applied a new tax to your income, you're probably going to pay that as well. So work out what the number is, put in a plan, execute it, you'll thank yourself later for it.